The QRX ATS, when an institutional investor sends us an order, that order can send out indications of interest to interested counterparties, liquidity providers, market makers. Those indications of interest would contain information about the size of the order, the structure of the order. In order to prevent information leakage, we do not disclose buy or sell. We do not disclose the price. We just indicate the structure and the size. The liquidity providers who have connected to our network can send back a response, and we would expect a two-sided market since they don't know whether it's a buy or a sell. They could send back a one-sided market if they're only interested in one side. We then compile all these responses, and if any of them match up against the limit price the institutional investor sent, or better, and we will make a match, and then you will send that to an exchange auction process for execution.
Does Matrix QRX ATS work through specific exchanges?
We could go to any exchange. It kind of just depends on circumstances. So it depends on market structure. It depends on the capacities of the liquidity providers to trade on one exchange versus another. So all this gets defined within our system. So we use generally what's called the price improvement mechanism. It can be called different things at different exchanges. SIBO AIM, MX Cube, MyX Prime, ISE PIM. Our goal is to drive maximum price improvement to the client. So we use the system that offers them the ability to get the most price improvement out of that auction. Once there's a match within the ATS, the two sides, the buy and the sell, will be sent to a price improvement auction at one of the exchanges, and then the exchanges will conduct another auction, a second auction. And at that point, there will be, in addition to the liquidity that was sourced in the ATS, there will be another chance for other liquidity providers to jump in and provide even more price improvement. Essentially, the price improvement auction acts as the printing mechanism for these matches. Because we can't trade them. We don't trade them. We can just match them. And then we create that match and send it down to an auction at an exchange, or it could even be multiple exchanges. If we've got multiple allocations, those matched pairs could go to multiple exchanges at the same time.
How often do traders get price improvement or a different counterparty?
About 50% of the time. And that can be better prices, or it could be the same price. It just depends on the exchange's rules. So the exchanges make it so that other people have a bite at the apple. So even if they come in at the exact same price as your counterparty, they can win a piece of that trade.
How does QRX ATS enhance liquidity?
That's just on the inbound. It's a kind of pre-exchange or off-exchange mechanism for sourcing additional liquidity. So the lit markets, the bid-ask spread, really is just an indication. There's always liquidity that's kind of inside the bid-ask spread, okay, but no one's going to post that because they could get run over. So, on an order-by-order basis, the bid-ask spread can be tightened up quite a bit, if the liquidity providers have the information about the structure of the order, the size of the order, and so forth. So that's basically how it improves, the liquidity experience. And this is something that all of our clients are looking for. It's the big, it's the big problem that is, asking to be solved right now. And the options markets are very fragmented.
Yeah.
18 exchanges, I can't even remember anymore, but 18, soon to be 19, could be 20, I don't know, but it's very, very fragmented. So our clients really want us to be able to find and source liquidity before that order actually gets out in the lit market and starts creating, havoc, trying to buy or sell against the bid or the offer.
What size clients use this product?
We've got a very wide spectrum of clients. We've got institutional clients that will send us, 5,000 to 10,000 lots all day long, and then we've got a lot of sell-side brokers. Anybody who's a Matrix client can access that might be sending one lots, or there could be people that are, have retail type of flow that's small. So, one size fits all, really.
What type of institutional investors benefit the most?
I think those that are trading primarily in illiquid names or less liquid names. So not necessarily the people that are trafficking in the ETF, options where the bid-ask spread's fairly narrow and you can kind of see the screens, and, trading on the screens most of the time is fine because it's 1 or 2 or 3 ticks wide. But, those that are operating in the less liquid names that are further down the list that need liquidity, where the bid-ask spreads are wide and the size is not that much, and you really need to be able to source liquidity before you go into the lit market, because as soon as you get into the lit market, you're going to start impacting those prices by just by having your order out there working. So you really want to, discreetly source liquidity if you can get it before you start operating, inside of those markets.
How is this different from other ATS offerings in the market?
We do not disclose the price or the direction of the orders. I think others may disclose that information, so we try to, minimize information leakage. I think the fact that it's fully integrated with our complete suite is what makes it unique. We've, spent the last couple years developing a really strong suite of price discovery type of algorithms for both single and multi-leg orders that will, get in between the bid and the ask and operate according to certain instructions that the users send. The ATS is fully integrated with those, so at any point while those orders are operating between the bid and the ask, they can begin sending IOIs out and looking for liquidity at any point in the process. So if you've got something that's slowly working from the near side to the far side, you could send an instruction with it that says, hey, once it crosses 50% of the bid-ask spread, I want it to start sending IOIs, and every tick it moves closer to the far side, it's sending off IOIs and getting some interest from liquidity providers to potentially trade inside the bid-ask spread. So our class of price discovery algos, and we've got several, and I said, and I mentioned, both simple and complex, have the ability to do that. So in addition to our regular algos that can source liquidity before they actually commence operating, they also have the ability to source liquidity while they're operating. And I think that full integration, is one of our advantages.
How are clients reacting so far?
Oh, it's been very good. We've been able to deliver a substantial amount of price improvement. We're relatively new, so we're still onboarding more liquidity providers and we can get better, but the interaction so far has been, kind of everything we've hoped for. Everybody's adamant they want it, they want to opt in, they want to use it, and the fact that we've got this process embedded, with our algo suite makes it that much more appealing. We've seen a huge uptick in the use of the price discovery algo suite, and because it's fully embedded with that suite, that makes it, exceptionally popular.
How do you see Matrix QRX ATS evolving?
The QRX ATS sits on top of a larger QRX process, and that process has other aspects that we refer to as Matrix QRX Direct. And what that enables people to do is if they have one-to-one relationships, like let's say you're a market maker and you have a hedge fund you trade with all the time, and they usually, pick up the phone or call you, or they send you an instant message, and then you agree on a price, and then you have to pick up the phone and call a broker to execute the trade. A lot of swivel chairing, a lot of room for error. You can actually automate that entire process. So if you're a market maker and you have a particular client, and rather than doing that workflow, you'd like to automate that entire process to where that hedge fund can use the QRX Direct mechanism, which is not part of the ATS, it's separate, to send those messages to the liquidity provider, match, execute the trades, and have everything happen fully automated. We support that as well.